The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Today is triskaidekaphobia. It's the longest word that I know. I don't think I can spell it, but I know what it means. It means the fear of the number 13. And some people have a morbid fear of it. Franklin Delano Roosevelt, president during the World War, beginning of World War II, he wouldn't travel on the 13th. And also, if you'll notice, many of the buildings where you go into New York and Chicago and any big cities, you'll notice that there's not even a 13 listed on the elevator. That's they use that there's wasted space there is what they do, from what I understand. I think that's where Santa Claus stores his toys, but I'm not sure. No one's ever been able to access that 13th floor. So anyway, this is really, when it comes to the market, there's a 70% bias for the market to be down on days where it's Friday the 13th, and that's what we have today, of course. But you add to it the fact that we're in a market that's in a down week, it also adds to that. So it's most probably we're going to close lower today. Whether it's slightly lower or not, I don't know. Maybe we close slightly higher. But as you can see, we'll look at some of these support points that we have coming in here a little bit later. But I wanted to start the show today with the euro. The euro is it is by far the most actively traded thing in the world. It trades in the multi-billions as opposed to millions with the futures contracts that we look at with some of these S&Ps and Dow Jones and stuff like that. So it's big. The actual market for Forex is somewhere around the $2 to $3 trillion per day. So it's a huge market. But you'll notice that the patterns on the euro are just absolutely beautiful. You'll see the big ABCD pattern that we had yesterday when it rallied up to 108.30. That was a nice pattern. We backed off to the 61% retracement, went up to the 61% retracement, and now we're coming down to this area of around 107.25, which will be an interesting spot to look at because it'll be our second higher bottom from the one we had on Monday. And this is going to be interesting because it being Friday like it is, we'll see if it actually holds it. The euro is still bearish. These are just shorter term patterns that work extremely well with the euro. It also moves in increments of 70 pips very often. And when it goes past 70, it'll most probably go to 1.27 or 1.618 of the 70, and that's what happened when we got to the 108.30 level. It went 120 points, which is 1.618 of 70, and that took us up to the high that we made, completing the ABCD butterfly pattern on the 15 minutes. So that's what we're looking at right now. Okay, we'll get to the markets now. We started the week when we were talking about the NASDAQ, the fact that it had a great deal. I've got to show you some of the things that were done by our good friend Jim Bartolioni of V50 Capital, and we'll look at that in just a second. But this is the NASDAQ showing that there were 25 trading days down from July into August 24th, and then from the 28th of September when we had the super full moon, we rallied up to close being 25 days higher last Wednesday, and now the market closed the week at 47.03. We're now trading in that 4,500 range, getting ready to break that without too much trouble, it looks like. And so we'll be watching to see what's happening. Now, we should have some type of a bounce coming in here early next week, I would think, Monday or Tuesday, because the market's extremely oversold. We're down 6 days in a row. It's unusual for the market to get down more than 8 days in a row, but we want to watch for this next rally that we get. And we should get it, because the market, there's still people looking around for buys, and there's nothing wrong with that. But we're looking at that one long-term pattern that our friend Jim Bartaleone, I'm going to use Bart as a whipping boy today in case some of this stuff doesn't work. I'll give you his home phone number, and you can call him. It's 703 555 5555. And if you don't get an answer, just keep dialing. Okay, this is the weekly chart comparing 2007 to 2015. Take a picture of this. It's worth a lot of money, in my opinion. I think we're heading down to something equal to what happened in 2007, and we'll wait and see if that happens. Now, it was an interesting interview on Bloomberg today. Excuse me, not on Bloomberg, on CNBC. Roger Lowenstein was on. He's a very popular author in New York, and he's written a book about the market, and not the market. He was writing a book about the euro just hit the price level. Hold on one second, boys and girls. The old cowboy's got to do something here. Hold on. There we go. Hold on. I got to turn this off. Okay. I got to turn this beeper off. There we go. Okay. Now, what we want to listen to is this Roger Lowenstein was on about the Federal Reserve, and boy, he really has a interesting book out. I think I'm going to have to purchase it. Forgot the title of it already, but if you go to www.amazon.com and type in his name, Roger Lowenstein, you'll see his newest book. It's about the Federal Reserve, and he really understands the history of it. He talks about Thomas Jefferson, how he was against a central bank. Also, Andrew Jackson was against it, and then what's happened to the Fed since then, and some interesting points on quantitative easing. It's the first time I've heard anybody talk about quantitative easing that I could actually understand it a little bit. So I'm going to have to get this book and read it, and hopefully the words won't be too big, like triskaidekaphobia, and we'll see if we can make some sense out of it. But I'll report back to you when I get back to the we'll see what happens when we do that. Anyway, the other thing that is important is that we've looked at this. One second, I'm trying to do multitasking here, and I'm not the best at it. Okay, the thing that we're watching today was the stock market, of course, because we're coming down to this major section here of where we have some pretty good support. And let me put this in here so we can take a look at it here. First, we'll take a look at the New York, shucks, hold on one second, boys and girls. I've got to get this chart put up here so that we can all see it. This is the NASDAQ. And as you can see, we have some support down here at the 45.30 level, so we're not too far away from that. The level in the S&P that we're looking at is at around the 2030 level. That's where we come into the level of the 786 retracement. And that's the other one that we're looking at to see if that's going to hold. My assumption is that we're into this holiday period next week. Well, the week after is the holiday, and of course the day after Thanksgiving, Black Friday, is the single most positive day of the stock market for the year. It's better than 75% of the chance of the time that the market's going to go close higher on that day. But again, that's just a probability, nothing more, nothing less. But it appears that we've made some type of a very significant top here in the market, given the fact that we've broken, so quickly, off of the numbers that we were looking at last Friday. I'll put up the New York Stock Exchange index chart just to show you where we were coming in this week. And as you can see, this is where we were. I haven't even got the updated prices in this, and we're already, trading below. We're down 2% on, a little more than 2% on the week already. And so that's another factor that's telling us that this could have been a major ABCD correction. In a bear market, the CD leg was exactly 1.27 of the AB leg, and it only spent the New York Stock Exchange only spent 2 hours above the 61% retracement. That was part of the day on Thursday and part of the day on Friday. So we'll wait and see what's happening. We still have some of these stocks, that we've looked at, Microsoft, Google, and some of the others. They've started to waver a little bit, but not that much overall. Now, another interesting thing, the first thing I do in the morning when I get up is to look at. Hold on just a second here. Yeah. Someone just Skyped me, but the original Federal Reserve was caused the America's Bank, I believe, with Thomas Jefferson, and then it was called the U.S. Bank during the time when we of Andrew Jackson. That's when I was born, of course, back in 1865, and so we can. You can see how it's changed. Then in 1913, we didn't have a central bank for 75 years, from what it was, 1845 through 1913. And then 1913, we have the Creature from Jekyll Island. That was Christmas Eve when they pushed the bill for the Federal Reserve through. There were only about a handful of senators there, but enough to get a quorum. And that's the name of it. The name of, thank you very much. The name of the book that Roger Lowenstein has come out with is called America's Bank. And the other book is, of course, The Creature from Jekyll Island. If you want to really read about how the Federal Reserve works, that book is really, really good. Years ago, back when I was at Drexel, the book that was so popular was The Secrets of the Temple, I believe is what it was called. That was also about the Federal Reserve. Folks, you have to realize the Federal Reserve has nothing to do with the federal government. It's a private bank for bankers. And if you think they got our back, I got some news for you. They don't. They had their own back, and that's what they're there for. So just remember, sure, they have to do some reporting, but they do very small reporting, and they give very little information. They're trying to be more, I forget what that big word is that they use, transparent, what they do. But frankly, if they were being transparent, why wouldn't they just do everything? Why do they even have secret things? That's how much power they have. It's the most powerful organization in our country. It's more powerful than Congress and the Senate. But that's neither here nor there. It's beyond my pay grade to figure that out. Okay, anyway, that's what we're looking at here. Some support coming into these markets. Hopefully, this will come in here. And I'm not saying hopefully, because I'm, overall I'm bearish. We'll see what's happening, and we'll see. We'd like to see an audit in the Federal Reserve. That's in their charter. They don't have to, really do that. So we'll have to wait and see. Okay, we can take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted a chart from my good friend Jim Bartolioni, and it's a chart showing the Dow Jones Industrials, and what he's done is he's used the musical scale to put this on here. This is a little bit beyond my pay grade, but I just wanted to show you the harmony that's here because it's really quite spectacular. And I know Basil, because he's a musician, uses some types of these things, and what's important is you can see this beautiful 1, 2, 3, 4, 5 expanding triangle that we have right now, and it's really it's really interesting. So it's pretty good. Now what they're looking at for the all-time low in the Dow going back to 1896, that goes back a long way, but this is just a long-term pattern, and I believe that when this thing finally does turn down, and when we go below, it's not if, it's when we go below the August 24th low, we're going to start to see a move very similar to what we had in 2007. There's just too many things lining up that tell us that is exactly what's happening, and that's from a technical base. It has nothing to do, with the fundamentals at all. I mean, zero. So this has nothing to do with anything like that. But keep in mind that it's just a probability. It's not a certainty. The next question that someone has asked was the price of copper. We've talked about this several times. I still believe, that copper is heading down to the $2.08 per pound level. We have a butterfly pattern forming there at the long-term 61% retracement of the year's range from January through now. So it's being pulled down like a magnet, in my opinion, and I think that's where we are going in copper, is down at the $2.08 per barrel level. That's what it looks like from we're looking at. Someone's asked a chart of Glencore. Unfortunately, I don't chart that stock. I don't do too much in stocks is a big understatement of the year. But anyway, that's what we're under watching. So anyway, if you want a copy of that chart from Jim Bartolione, if you'll drop me an email, I will forward it on to you so that you can make your own assumptions of it. I mean, it's really long term, and frankly, long term charts are interesting to look at, but that's not where you have to make your play. It's got to be on something where you can control to see where we are with these different things. So that's why I go down from a daily down to an hourly chart. And since we're talking about that, remember the crude oil, folks. It's just like in the situation that we have going on, with copper and just about every other commodity. They're pointing lower, and crude oil is only at less than $1 away from this target that we've been looking at, and we started the week 10-12% higher than where we are right now. So it looks like we're going to be coming down into the area of 40.50 per barrel. And if we look at just a simple time chart on the oil, from the highs to the lows, that would take us right down to the area around the 17th of wow, we've come down more than 10% on the week. Hold on just one second, and I'll put this up so you folks can take a look at it. The logical day for this will be the 17th, and that happens to be a key date that Norm Winsky has talked about. Also, it's also important for crude oil and gold and the stock market, and also bonds. So that's going to be a big day, I would believe, on Tuesday the 17th, if this is in fact going to be a spot that we're watching. And then we'll be able to look at that. I'm getting some chatter here in the Tiger Den about the chart that Bart put up. If you want that chart, folks, Jim and Mr. Z, just drop me an email. It's larrypesavento@gmail.com, and I'll send it to you, and then you can chat with Jim. I'll give you his email address if you like, and he can explain it to you more. But he does long-term works with log charts and also the musical scale. He's an ex pilot, a Navy pilot. He used to land those things on the aircraft carriers and stuff. So he's pretty big into the technical part. And pilots make great traders because they understand charting, pretty well, and they certainly understand risk. Their flight check is really nothing short of miraculous, because they have to, because their lives are at stake. So if you want that, just drop me an email and I'll make sure you get it. 877-927-6648. Come back. We've got to chat a little bit about the grains, because we're making new lows in just about everything, so we got to pay attention to that.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, and I was planning to have Rich Anderson on today, but he's traveling today. We'll have him on next week. We have some big, what do we call it? News in the grain markets, the fact that they're making new lows in soybeans and corn, and so we have to pay attention to that. Just to see, what the fundamentals are, and of course he will give us some more information, on that. But the overall, part of the deflationary cycle that the Fed is so afraid of is still, proceeding with new lows in platinum And of course, we've broken down in gold and silver, and some of the other things that are happening. What's happening now. So the overall charts just look extremely bearish. Now in the commodity, in the forex exchange, forex market that we're looking at, we're still looking at these potential tops that we're watching in the Canadian dollar and Swiss franc. And we're back up into these areas where we were yesterday. We sold off 100 pips in the Canadian dollar, and then we've rallied back to challenge these highs again. So this is a Friday, so probably nothing's going to happen, right now. But it looks like, we're at the point where we've had some major ones. The biggest one, of course, has been the Japanese yen versus the U.S. dollar. We went exactly up to the level in the yen versus the dollar, a perfect ABCD pattern. And we also it hit that 20-min line. It hit it 5 times, and that's a line that acts as a fulcrum. I mean, it's hard to use it technically, but if you practice with it a little bit, it can certainly give you some pretty good ideas, especially when everything comes together like this one happened to do at this particular spot. So we want to watch this one also very closely, because it's set up so very nicely on what we're watching as far as these foreign exchange. The same thing is true with the Swiss franc chart, and if I can find it, I will bring it up here so we can see it. And right now I can't find it, so we'll not worry too much about it and just move on to the next thing. Oh, someone did have a question. I posted the chart about the copper 2 or 3 days ago, about how it has a PhD in economics and how it's changed over these past few years, especially since July of 2013. Copper started to drop from around 345 all the way down to where we're trading now at the 216 level. And the long-term objective on this, of course, is going to be down near the 208 level, and that might not even hold it. I don't know. But since the 2013, there's not been much of a correlation. Actually, this correlation started to diverge back in 2011, because stocks continued to go higher. And as you can see from this chart, that in 2012, after it made a 61% retracement of the high from 2010, the market has been drifting lower and lower. And that ABCD pattern there between 2010 and where we are right now, this 4-year cycle, should bottom at around 208. That's where the 78.6% retracement is of this whole move, if that in fact is going to hold it. But on the daily chart, it's very clear that that's where it wants to go, is the 208 level. I've had a question about corn. Corn is still relatively cheap compared to where it was a year ago. We are trading at around 360 a bushel in corn. Soybeans have broken sharply below the $9 a bushel level. We're trading in the $8.50 level, in the soybeans. So we are making new lows in all of these. But we'll cover this when we have Rich on when Rich Anderson from Anderson Capital Management comes on, and he'll walk us through some of the things that they're looking at for supply, demand, and what the markets are looking at. But part of this, folks, is when the dollar strengthens like we have right now, it makes our products more expensive. And so that's why they push them down in price in order to people to be able to buy them. And whether that's going to help or not, we'll have to wait and see if that's going to be the case. Someone's asked a question about the gold and silver. The main thing is that you don't really have to worry too much about some of these things as far as timing, because once they're below these numbers that we look at, they're most probably going to go to the next level. And we really don't have any support in the silver market until below 1410, and gold, the support comes in around that old double bottom at around 1030 to 1040 per ounce. So it doesn't appear that it wants to do much, from these levels. So that's one thing that I would be watching, is to see, wait till we get to that spot, and then we'll see if that's going to be the case. The most important thing this week, folks, is when we started this week, I started with the monthly chart that I posted every day, and I'm going to continue to post it every day because it's that important. That shows the high from 2007 to where we are right now. And it also shows the 1, 2, 3, 4, 5 expanding triangle. It shows the divergence that we've had. And so these are the things that I think are extremely important, and are the things that we really need to focus on for longer term, because there's only been 150 stocks that have been pushing the stock market up, and a couple of these stocks have are under some pretty severe pressure. Look at Apple. I mean, you can see Apple made the 786 retracement here on Friday, right to the exact penny at that 124, and we're down $10, and we're breaking down, and we left a huge gap on Apple to the downside, on Tuesday. And so this is a really negative chart, on Apple, and it's the most widely held stock in the world, and of course its weighting in the Dow and the Nasdaq is very, very high. So that's another reason why it pushes some of these other indices down. So, but we've the fact that Apple stopped exactly at the 786 at 124 is really well, actually the number was 124 and the high came in at 123.82, so it missed it by 18 cents and $124 stock. So that's pretty much spot on. But just about everybody that's bought Apple, in fact, this is true, since January, almost everybody that has bought Apple has a loss, with the exception of the folks that bought it on the 24th or 25th of August. People that bought it around that time at the 106 level are still okay, but they only have a $6 cushion, and the market's just giving up more and more each day. And if it gets below that 106 level, Apple is going to most probably head down to the area of around $75. That would be the longer term ABCD here in Apple over a really long over a long time frame. So I'll try to get this Apple chart up sometime before the end of the show here, and see if we can get it. Anyway, I would like to mention one other thing, and that is the over the holiday season here, the question came up is about the probabilities of these things occurring. Now, this goes back from 1898 when they first started looking at this, but Black Friday, the day after Thursday, is the most single positive day in the stock market. And the main thing is that it has a spot where that it's just the euphoria of that time of what's going on with the families and everything is just strong, and that causes the people to go up. And not only that, but it's a thinly traded day because many people take the 2 days off, Thursday and Friday, and so it's skewed. But boy, you got to watch that date because it really has a lot of things telling you that that's where you're that's what you're looking at. Now I'm going to show you the chart of Apple here. We'll be able to get it up here, and you'll be able to take a look at it, and you'll be able to see what you're looking at. We talked about the gaps that we've had in Microsoft and Google and Amazon, and it was really all of these have these big gaps that will be in the process of being filled recently. And then we'll see, what happens. But keep an eye on that New York Stock Exchange Index chart, folks. That's the one that's the really big one, and the one that will take you to the promised land. I know it's hard to realize that it's only 150 stocks that are causing all this stuff, but that is, in fact, what is, we'll see. Anyway, that's what we're going to be looking at. Okay, so the next thing we want to think about is to take a look at the price of gold. Now, we have, gold has been dropping precipitously since it made the ABCD pattern at the price of 1091. Let's put this up here so you folks can take a look at it. And we've now gone and we've broken below, the major support here in gold. And so we're watching to see what's happening. So anyway, we will keep an eye on these things. But one of our good people here in the TFNN has mentioned that we now have a island reversal forming in the NASDAQ and the MDX, and that's certainly another bearish pattern that will tell us that we're pretty much going at the same thing. So anyway, I will try to cover some of the greens on Monday because I rely a lot on Rich as far the technical part. I can understand, they're going down. I mean, they've been going down for quite some time, but the things about deliveries and some of the things that's happening with the US dollar, Rich helps me with a great deal because some of these are influencing in the grains, especially corn and wheat and beans, because we're the world's breadbasket for this, and so that's why I like to do that. I used to do just the commodity show, but now I try to spread it out, over certain things. But there's just no looking back at the fact that we're in a pretty massive bear market in commodities, which we've been in for 2 years. That affects China, folks, because they're a big supplier of goods, and they have to make, out of these, they have to make products, and they're not buying them. They're not importing stuff to buy it. So that's it. If you look at the Dow Jones Transportations, if you look at the Dow Jones Utilities, I mean, we've been sharing the fact that this bearishness is been going from one thing to another, and this is it's getting worse and worse this week with the action that we're seeing in the market right now. So getting back to the gold market, I wanted to bring this chart again from Larry Edelson. It's on his cycles for his neural network, but just to show you that he's looking for a potential low to come in here in late November, and here we are. We're in mid-November right now, so right around Thanksgiving or right after Thanksgiving, we want to be looking for a major bottom in the gold market. And so that's what I think we should be looking at. And what else could you do? You can't do anything more than that, and see what's going on, and we'll see what's happening. We're making new lows now in the market across the NASDAQ and the S&P, which is not surprising, but we should get some pretty good support at the 2030 level, 2028 level. That's the 786 level in the S&P, and failing that, it's all bets are off, because this is only the first week down, folks. And this is a bad week. Can you imagine what it's going to be like? It probably won't be straight down, but this is the first week down, and seldom do you get just 1 week down after a really bad week, which we're going to be down probably 3% overall in everything. So we want to pay attention to that as we come into into early next week. So we'll watch that very, very closely. Okay, someone asked a question about the Microsoft. I want to just bring this up here because we're having the same thing. Microsoft has now started to weaken again. It went up to those levels that we looked at, and that's pretty much, like we're ready to see this market, is going to fill this gap down around the 48 level, and that's an easy 14% drop in the Microsoft. Now the old highs come in at around 50, so we're about 10% away on that. So there should be some support in Microsoft around 50, and then we'll see if that's going to be holding, that level also. So we'll see if that's going to be the case at the same time. 877-927 6648. If you have any questions, we'll be back here. We got to take a little break, and then we'll finish up the show here, and we'll be back in just a few minutes.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I want to end the show with the old chart that makes the most sense to me, and that is the fact that this market has been turning down for quite some time. That's the New York Stock Exchange index chart that our good friend Jim Bartolone was kind enough to bring it in. This tells it exactly like it is. Just be really careful being long stocks in here, because there could be an outlier event come in, something political or economic or geophysical. I don't know what it could be, that it could be, pushing things, really into a quagmire that could really start to accelerate to the downside. And remember, folks, in 2007, Bernanke came out and said that there was really no hint of anything wrong in the financial markets. That was in October of 2007, and so you can't always use them as a background to what's going on. So keep that in mind as you're looking at that. The crude oil is getting very, very close to the objective, but I think the best time to look at it from the long side would probably be Monday or Tuesday, preferably Tuesday. I certainly wouldn't buy it on a Friday with a market going lower, and we'll see what's going to go to the downside. So someone said Bernanke should apologize. They don't apologize. They just say, well, that's just we're just giving expectations. We're not giving certainties, and it's true. That's what they are doing. We'll want to watch the gold also on Tuesday. That'll be another one. So a lot of things are coming due on Tuesday, would be my guess. But I think, so we'll see. Like the man says, I'm often wrong, but never without an opinion. So we'll see. My favorite quote is from Abraham Lincoln. It says, I appreciate your opinion, however wrong it may be. So we'll see what's really happening here. Okay, so we want to watch that very closely. I'll be doing a lot of stuff over the weekend to get prepared for the coming time here, but we should be getting a bounce here because we're down 7 days now in the market, and we'll see what happens. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.